What is going on, guys? Welcome back to another video. Today we got a pretty good video today, and it is a good options strategy for people who are neutral or bullish in the stock market, specifically on individual stocks or chosen ETFs. So say you are bullish on the tech sector, the NASDAQ. We can go to something like the QQQ, triple Q, which is an ETF that tracks the tech sector, the NASDAQ. So this one would require a lot of capital, of course. We're going to be selling cash secured puts at the money. So this means we're going to be selling cash secured puts like directly at the same strike price as the share price, either slightly above or slightly under. Normally I would do slightly under if I am neutral or bullish. So if you are unsure, obviously you wouldn't do it at the money, you would do slightly lower strikes. So let's assume you are neutral or bullish and you believe that in the next week the stock price will either stay flat or rise. And it doesn't even have to rise that much. It just has to stay above your strike price to win on the trade. So we could do something like T triple Q or QQQ. This one requires 33K. So let's actually do T triple Q. So this one requires a little less capital. Obviously, when selling cash secured puts, you need to put down collateral equal to 100 times the strike price. So if we do T triple Q, we will need $10,500. The strike price multiplied by 100. So if we are overly bullish or neutral on T triple Q, which is the NASDAQ 3 times leveraged, which is a bit risky, but overall it's done pretty well. So if you're bullish and instead of buying shares or calls, you can just sell a cash secured put such as this. So we put down a collateral of $10,500 and we receive a credit of $320. So if you do this every week, you could make a 3% return on your money every single week, assuming that TQQQ remains flat or, of course, it increases in price. So you can continue to sell cash secured puts at the money every single week, assuming the market conditions are right. So yeah, if you do this every single week and you actually win every single week, obviously the market doesn't always go up. Obviously it goes up and down. Then you will receive some pretty good returns compounding week after week. Now, what happens if we lose on this trade? What happens if the stock price goes under our strike price? Well, we just have to buy 100 shares at that strike price, which if you were bullish or neutral in it and you bought 100 shares anyway, then there's no big deal. You're just getting paid to place a limit buy order on these stocks. So let's take a look at something that requires a little less capital, a little less risky. But if you want to be a little bit safer, you don't have to do an at the money strike such as 105, 104. You can do something a little bit lower, something like under $100. You could do like a $97 strike put, and you receive $100 credit expiring next week. So that's something that I would do. I don't normally do at the money puts unless I'm overly bullish or feeling neutral about it. I don't know what the market conditions are doing these days. It's very choppy, and we're not really trying to predict the market. We're trying to be a little bit safe. So if you have a little less capital, only $2,000 to $3,000, Palantir is a good choice. It's been relatively flat these past few months, and it only requires $2,000 of capital. So if we go to the options train and we go on sell puts for cash secured puts, we can take a look at the strike prices. So if we are neutral or bullish, we can choose something like the 23.5 or the $23 strike, or even the $24 strike if you are pretty bullish on it. So if you're doing at the money strike, such as 23.5, we put down a collateral of $2,350, which is very attainable by many people. And for this trade, we will receive a pretty good credit of $92. So if you have $10,000, you sell 4 of these, you can make potentially a little under $400 per week. Now, of course, this won't happen every single week. Market conditions change, but assuming the conditions stay the same, that is what will happen. And Palantir, pretty good stock. It has been pretty flat, so of course, if you can continue doing this, you can receive some pretty good returns on your capital. So this is one strategy for people. Instead of buying shares, you can just sell at the money cash secure puts. It's great for neutral markets, and it's pretty fun to do, collecting that juicy premium every single week, especially on volatile stocks such as Palantir or QQQ. So that's about it for this video. If it helped you in any way, please leave a like. If you are new to the channel, please consider subscribing. It helps me produce more videos for you guys. And if you have any suggestions for more videos, please leave a comment down below. Thanks for watching.